300 million. Take a second, just let that completely sink in. 300 million. In the second quarter of 2026, Spotify became the very first audio streaming service in the world to reach 300 million premium-paying subscribers. I mean, it is a truly colossal achievement. It cements a level of market penetration that legacy media companies can literally only dream of. But as we start looking closely at the recent earnings report, this staggering scale, it's actually only half the story.
Welcome to today's Explainer. We are doing a deep dive into Spotify Technology SA. You know them by their ticker symbol, SPOT. We're looking at their Q2 2026 results. And today, we're unpacking a truly fascinating tug-of-war. On one hand, you've got these record-breaking user milestones and absolutely massive cash generation. But on the other hand, there's an unexpected earnings miss, and it is driven entirely by a very aggressive, incredibly expensive pivot into generative AI.
Okay, let's dive into this. Here's our roadmap for today. First, we're breaking down Spotify's historic global milestones, then their mixed bag Q2 financials, that massive all-in bet on AI, Wall Street's wildly divided targets, the key risks and competition, and finally, our verdict.
Starting with Section 1, Historic Global Milestones.
Before we even talk about dollars and euros, we really have to look at the sheer scale of this two-sided marketplace. Right now, Spotify commands 777 million monthly active users globally. That is up 12% year over year. It represents a massive, ever-expanding funnel of engagement. And within that funnel, they've managed to hit that historic milestone we opened with, 300 million premium subscribers. You see, Spotify just operates a highly effective model here. They use that ad-supported free tier to hook listeners, they learn their habits, and then eventually they convert them to a premium tier. And that premium tier generates nearly all of the company's gross profit. Having 300 million people paying a reliable monthly fee for music, podcasts, and audiobooks, that gives Spotify an unparalleled foundation, not to mention an incredibly deep data moat in the global audio industry.
All right, moving to Section 2, Q2 financials. Definitely a mixed bag. Now, this is exactly where the tension begins for Q2 2026. The user numbers, absolutely perfect, but the financial metrics paint a much more complex picture. Now, what's really interesting about this is the severe contrast at play. Spotify is currently operating as an absolute cash machine. They hit a record 33.4% gross margin, which, by the way, is up nearly 200 basis points from last year. They generated a stunning 797 million euros in free cash flow just in this quarter alone, pushing their trailing 12-month free cash flow to a massive 3.3 billion euros. I mean, they are essentially sitting on a fortress of 9.4 billion euros in cash with virtually zero debt. But despite that mountain of money, earnings per share came in at $3.03. That actually missed analyst consensus estimates by about 7.3%. And on top of that, ad-supported revenue kind of just crawled forward with only 3% growth. Now, the ad market has been notoriously tough lately, right? Brands are tightening their belts. Though, to be fair, management does expect that to accelerate to double digits in the second half of the year.
Driving that entire financial engine, though, is total quarterly revenue, which just hit 4.8 billion euros. And what's absolutely crucial to understand here is that this represents a 15% growth rate at constant currency. Accelerating top-line growth to 15% at this massive scale, especially when you consider today's macroeconomic climate and all this consumer fatigue, is no small feat. It's actually an acceleration from the 14% growth they saw in Q1. Premium revenue alone grew 16%, and that was aided by a 7.4% increase in average revenue per user. So the core business, it is incredibly healthy and expanding rapidly.
Which brings us to Section 3. Going all in on AI.
So if revenues are accelerating and margins are sitting at record highs, what exactly caused that earnings miss? Well, the answer is a fundamental, incredibly expensive shift toward artificial intelligence. As co-CEO Gustav Söderström put it during their 2026 Investor Day, they are actively building a media player for the generative era. Spotify is just no longer satisfied being a passive library of songs you mindlessly scroll through on your commute. They're completely transforming into an interactive, highly personalized, generative engine that anticipates what you want to hear and actually helps you create it. Let's walk through how this actually looks across their new product stack, step by step, because the way users interact with the app is fundamentally changing. It starts with Talk to Spotify. This is an AI voice and text assistant rolled out to premium users that lets you have real-time, fluid conversations to discover new music, and you never even have to interrupt your current playback. Then there's the AI DJ, which is now expanded across more than 75 global markets and multiple languages. It acts as this wildly accurate, hyper-personalized curator. Next up is prompted playlists. This one is already attracting 14 million users who are just typing in text prompts and emojis to instantly generate these hyper-specific custom playlists. And finally, perhaps the most ambitious feature of the whole bunch, paid AI remix tools. These actually let premium users generate unique covers, mashups, and remixes of their favorite songs. Because hey, apparently everyone secretly wants to be a DJ in their bedroom.
And this intense AI push is already paying off on the monetization front. Audiobooks Plus just blew past $100 million in annual recurring revenue. For those AI remix tools I just mentioned, Spotify has already secured some pretty landmark licensing deals with major heavyweights like Universal Music Group, Merlin, and Cobalt. This ensures artists actually get paid for generative content. They're even rolling out listener-generated AI podcasts. However, all of this innovation does not come cheap. Spotify is taking a €200 million incremental hit to operating expenses for 2026, and that is purely to fund these heavy AI infrastructure investments and the marketing required to push them. So, this is the absolutely crucial point. That €200 million price tag is exactly what dragged down their earnings and caused that EPS miss we talked about earlier.
Moving on to Section 4, Wall Street's wide target range. So despite that earnings miss, the market largely cheered the revenue growth. In fact, Spotify stock actually gained 12.5% in the 4 weeks following the report, giving the company a staggering market cap of roughly $109.7 billion. And this brilliantly illustrates how entirely divided the experts are on what Spotify is actually worth today. Based on 41 analysts polled by S&P Global, the average price target sits at $610. But look at the incredible spread between the bulls and the bears here. You've got Canaccord Genuity setting a highly optimistic target of $724, while Pivotal Research sits way down at $422. That massive gap tells us nobody truly knows if this AI spending spree is a masterstroke of genius that's going to define the next decade of audio, or if it's just a colossal waste of cash.
That leads us right into Section 5, Key Risks in Competition.
To understand why some analysts are being so cautious, we really need to bring things back down to earth and look at the actual headwinds they're facing, starting first and foremost with that valuation gap. Right now, Spotify is trading at about 32 times forward earnings. That's a noticeable premium over the broader tech and entertainment industry average, which sits at around 27 times. Look, when a stock is priced at a multiple like this, the market is essentially pricing in perfection. It leaves Spotify incredibly vulnerable to any disappointment. Even a minor slip in subscriber growth, or just a slight delay in their profit margin expansion, that could easily trigger a harsh, immediate pullback in the stock price.
So this premium price tag basically leaves zero room for error. Yet the headwinds are very real. User growth is visibly cooling off in mature markets. That's forcing management to pivot their strategy in emerging markets toward user quality rather than just chasing sheer volume. Because of this shift, Q3 net additions are guided to drop to 11 million, which is down from the 16 million we just saw in Q2. Meanwhile, those massive AI costs we discussed, they're threatening to drag Q3 gross margins back down to 32.9%. Now, you add in the endlessly deep pockets of tech giants pushing these aggressive Apple One and Amazon Prime music bundles, plus the looming existential threat of independent AI music creation platforms that could potentially bypass traditional record labels entirely, and well, you have a very complex minefield of risks for management to navigate.
Which brings us to our final section, number 6, the final verdict. When you step back and look at the entirety of Spotify's Q2 2026 report, it really is that classic tug of war. On one side of the rope, you have undeniable fundamental strength. Spotify is incredibly robust, with accelerating revenue growth, record-high gross margins, 300 million premium subscribers locked in, and a pristine balance sheet sitting on 9.4 billion euros in cash. But pulling hard on the other side of that rope is a highly demanding valuation. They are trading at a steep multiple while user growth slows in key markets, and they are intentionally putting immediate pressure on their own profit margins to fund this massive generative pivot.
The consensus view right now, it remains cautiously bullish, but the risk-reward profile is incredibly balanced here. It all hinges on whether this bold, highly expensive shift into artificial intelligence will cement Spotify's global dominance for the next generation of listeners, or if it will just burn through cash in an increasingly saturated market. So, I'll leave you with this provocative thought to consider for your own research. With 300 million paying subscribers already locked into their ecosystem, is the AI revolution really worth the premium price tag? Thank you so much for joining me for this explainer. Keep learning, keep analyzing, and I'll catch you next time.